So since election is something which nobody is talking about today, but I'm sure 6 months from now, everybody will talk about elections. And when you are moving into a new election cycle, 6 to 8 months before that, the curiosity, the nervousness, the commitment always goes down. So what are the chances that next 6, 7 months, by the time global markets recover, Indian underperformance will continue because of the general election cycle?
I wouldn't rule it out. I wouldn't rule it out, though I don't believe that India will underperform. I probably think at worst case or a base case scenario, India will probably be in line with global markets or in line with emerging markets. But I don't think that India will underperform because things like financial stability, inflation, the macros of India are a lot better than where they were in 2013 or 2008. See, mind you, in 2013 and 2008, we had huge challenges of inflation. Today, at least, our inflation rates are not way higher than what it is the world over. If at all, it's actually been lower and managed reasonably well. Actually, hats off in the way our macros have really got managed. So kudos to the entire team out there from the government and policymakers side. So I don't think it's going to be worse than global markets. It probably could be that India would fall or correct or consolidate in line with global markets. And then after that, I think come the end of this year, the start of next year, 2024, you're going to see a huge outperformance coming in from India because again, all the positives will come back, the world gets into a risk-on trade, and India is going to be the dark horse.
Let's divide the market in three time phases: 1 year, 3 year, 3 year plus. What looks good and attractive for 1 year, 3 year, and 5 years?
I think, Nikunj, from a 1 year perspective, the large caps look good. I clearly believe the large cap. Buy the Nifty or buy a basket of maybe 5 to 6 stocks in the Nifty, and I think they all have come off on an average by about 25%, 20 to 30% from their peaks. Maybe the room for them to fall further could be 5 to 10% because you can never say where the bottom is. But I think from a 1 year perspective, I think that pack will do extremely well. Okay, so I think from a 1 year perspective, I think that's the space. From a 3 year plus perspective, I clearly believe that the mid caps and small caps will essentially are going to beat every asset class globally and in India hands down. So I clearly believe from a 3 year plus horizon, I think mid to small caps look really well poised for a big outperformance.
5 year plus?
Hard to say, but I think 5 year plus, I clearly believe that in a bull market or an upcycle, the mid and the small caps will outperform. And this has happened always. And so if you ask me from a 5 year plus, again, it's going to be largely mid and small caps, which will do extremely better. Now, you could, when I say mid and small caps, it could also mean a bunch of stocks which today are probably hated, are large enough, but you can't call them as mid and small caps because the capitalization is a bit higher. But for example, some of the stocks on the online side, which had IPO'd in 21, I think from 5 years from now, these could be hugely profitable companies and they could be a lot more valuable than where they are today. So it could be a set of stocks which are either hated today or are doing well but are still mid and small caps. So from a 5 year perspective, I think that's the pack which will do very well.
Okay, so I go back to the beginning of the question, 1 year. 5 to 6 large cap stocks. What would be the combination here?
It would be a combination of, say, for example, I think Reliance Industries, which we own in our PMS, I think Reliance Industries looks good at this kind of price. From 2,800, it's probably down to 2,200, but I think,
it's underperformed. Even at 2,800, it's underperformed, I think, from last 2 years almost.
Yes, it's underperformed, but I think over the next 1 year plus, I think currently it's underperforming also because it's announced a capex plan, it's announced a borrowing plan, and the street tends to take all of these with slight bit of negativity or bit of caution. But I think it's there pretty much in the price. So I think that at this kind of prices looks good. I think the HDFC twins, I think they look good. Especially post the merger, I think they should look good. So that pack looks extremely good. You could even kind of say ICICI Bank or anything like that. I think some of the defense names like Bharat Dynamics or Bharat Electronics, some of these names which I'm taking, we own in our PMS. I think these kind of companies they look pretty good. I think from at least even a 1 year or even from a 1 to 3 year perspective, these kind of large cap names look good. Some of the names in the insurance side, names on the mutual fund and asset management company side. I mean, we own HDFC, AMC. I mean, yesterday it was trading at 25 times trailing earnings. 25 times trailing earnings for a business where the penetration is just about 2, 3, 4%, you're going to see more and more people and investors come in and participate in SIPs. And a business does not need capital. On a base case, this business has 10 to 15% likely earnings growth, or 25 to 30% return on equity. So highly capital efficient business, and a business which could keep growing for the next 5, 10, 15, 20 years, and trading at 25 times trailing earnings. Okay. Probably the peak was at 50 times trailing earnings, versus that is 25 times trailing earnings. I'm saying these kind of stocks look extremely good. They may not create fireworks for you, but would they be good place to be in from a 1 year plus perspective? I think so.